I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, January 26th. That's right, it is the 26th. It seems like it was just New Year's Eve last week, but here we are at the end of the month. A lot of fireworks to start the year, and today didn't disappoint. We saw that again with corn catching a big bid, moving higher after the USDA released some flash sales this morning. We saw 1,360,000 metric tons of corn to China and 102,800 metric tons to unknown. So all in all, about 57.6 million bushels of corn sold. And that got the bulls awfully excited after holding technical support yesterday. And we had kind of talked about that in our Tech Talk that we put out on Friday afternoon. That big downward move on Friday, we said, don't try to find a fundamental catalyst to explain that move. That was a lot of technicals, money flow, and options expiration playing a role there. We held support, which we had listed as the previous breakout point from that USDA report. We got back out above 517 to 520. That was the old gap, and it's going to be a bit of a congestion pocket for us going forward because that was also the breakdown point on Friday. So 517 to 520 is now the pocket that we're keeping a very close eye on. So as long as the bulls can defend this on a closing basis going forward, I think they remain in control. If we start to lose ground and break back below there, I wouldn't be surprised to see that trigger a little bit of long liquidation. So that's going to be the pocket we're keeping a pretty close eye on here going forward, and something you should probably keep a close eye on as well. Now moving over to the wheat market. Wheat, we saw a big move higher as well. Wheat, I'm not as optimistic on here in the very near term. But the grain market and the fund flow in the grain markets has been strong. So I wouldn't be lunging to go aggressively short at these prices, but we're certainly keeping an eye on it. This trend line support was broken last week. Now we're retesting that. That is now resistance. If we fail to get out above this 670 level for that March Chicago wheat contract, I wouldn't be opposed to maybe looking at the sell side. But if we get out above here, I'm probably going to want to rip the Band-Aid off, take your medicine, and move on, wait for another trade setup on that front. Now, moving over to the livestock, something we also touched on in last Friday's Tech Talk, April live cattle. We got that breakout move above 120, and we're kind of lingering here now at this resistance point, which was the high end from February 18th, just above that 122 3/4 area. I think we can still make a run at these contract highs, 124.5. The cash market seems to be wanting to firm up a little bit here, which could help spur some momentum in this market. But the bigger catalyst that we've been talking about and we'll be continuing to talk about and keeping a close eye on is money flow. We've seen a lot of fund participation in a lot of the commodity markets. You look at the softs, the precious metals, the energies, the grains, etc. A lot of them have seen that fund participation, but livestock has not gotten that yet, but I think it will come. So we're still pretty upbeat on cattle. April, we get up to 124.5. I'm not going to be as optimistic there. I think there's at that point the juice in the grape is somewhat limited, but we are still optimistic on the deferreds going further out and view any meaningful pullbacks as buying opportunities unless fundamentals change here going forward. And the same can be said with lean hogs, which will be the last chart that we touch on. This is the chart that we looked over on Friday, the inverse head and shoulders, holding the 71 to 72 support and breaking out above 75, opening the door for a retest of the contract highs, which goes back all the way in October-ish 2019, 77.10. In this morning's daily livestock roundup, we talked about 77.10 being a point to reduce long exposure if you have been long. I'm still optimistic on lean hogs, but we might want to see a little bit of a retracement and a cool down period here in the very near term. Look for this previous resistance to now be support. That comes in at 75. That would represent an opportunity to maybe look back in on the long side if you reduced against resistance here today. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.